Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hi, everybody. Welcome back for another week of my podcast. Just like last couple of weeks, nothing much happens on the market overall until Wednesday, really. Before that, everything seems just Dow Jones seems to defy gravity, just kind of go up and up and up. And like I said previously, I mean, these things won't last. And then suddenly, we got on Thursday, I think, concerns of second wave of coronavirus outbreak in America. Well, I've said it before. All this mass gathering and demonstration due to George Floyd death, both in America as well as in UK, for the past 2 weeks or so, definitely, is big concern for everybody about his death. But the way that people gather together is not helping to isolate the virus, and it's coming back. It's no surprise. Also, America, each state seems to have its own way to reducing the lockdown, and then people in general in I think UK as well as much of America, people walking around just not wearing face masks. Just I suppose it's cultural thing. They're just not used to it, and maybe they think the virus won't touch them. But however it is, the virus is real and it affects everyone. It doesn't really care borders. It doesn't care about race or religions or which country you're from. It just trying to find a host to infect. And if we find a body that's touched before by the virus, it would just spread. Yeah, some of us were prone to it, and then fall ill for it, and that situation, and it's quite worrying. I mean, this is going to be the third week since George Floyd's death in the hands of the white policeman, and I think more of the coronavirus cases could be detected around within US mainly, but some of the resurgence also will be in UK because of the easing of lockdown around Europe a bit. Probably not as much as US, but what alarming also is China on Sunday have found some new local outbreak of coronavirus in Peking, I believe, one of the big meat market, and that is concerning because China is supposed to have zero coronavirus for the last 2-3 weeks or so, right, about a month, and suddenly it came back up again. How did it happen? I don't know, but it is sort of worrying. But I overall think, this is just, it shows how the market really is driven by emotion. All this market efficiency theory is basically, as far as I'm concerned, it's garbage to be put in bed and put in the bin and not taught at all. But people overall are just what you call with the economy tanking. The Fed just pump loads of money in, and then I probably conspiracy theory here. Donald Trump probably have talked with some of the bankers, the big six banks in America, and pump the money into the market and make all these big bankers go and buy, and then the retail investor come in, and then just go to buy the whole market up and up for the past 6 weeks, 8 weeks or so, and it caused a lot of people fear of missing out, so to speak, and just gone in. A lot of small investor gone in, retail investor gone in. But the funny thing is, over the last month or so, there's a report coming out that big hedge fund basically are not buying, and basically just waiting on the side, similar to Warren Buffett does. So it should sort of show how the big fish, the big cats, so to speak, are not actually buying shares as much as or interested in buying shares as much as the retail investors, and then we have this big coronavirus concern come out on Wednesday and Thursday. The U.S. Down about 1,800 points. I mean, that is, to me, when people say the bear market is finished, the bull market is here to stay. Well, the general thing is the bull market is when it go up the stairs. It goes slowly. and when it come down in a bear market, it jump out the window or use the elevator, people say. And you also, when a bear market, you see a lot of volatility, especially turns when the market trying to find its next trend. There's always volatility, and to say that bull market is back with 1,800 points or so down in U.S. Dow Jones, and cause a lot of downs. Index going down the following day around Friday. I personally still believe it is a bear market. There's no doubt about it. And I think now it's basically more emotional driven. A lot of people still think it's a good time. Fed's got to put money in, and then I think Wednesday, Jerome Powell said, okay, the interest rate will stay until 2022, I believe. And they didn't say much about how Fed is going to help the market and so forth, and took a bit of air out of the recent rise of stock market as well. So it could well be a perfect excuse for people, just I suppose the big fish try to push the market down to earn money, shorting the market that way. But overall, I think the downturn from February to March, it was rather sharp, very painful, very, very quick, thousands of points down and then up as well, and very volatile. And then slowly, you saw last 8 weeks, almost 10 weeks, it's going up. And we only see 300-400 points, maybe 500 points up. We don't see sudden down with 1,800 points. So this basically reminds us that the bear market is not finished. I think the rebound is more or less done. There's been quite a lot. It could still go back on. We test the high, especially on Nasdaq back to 10,000 mark, and probably come back down again. But overall, just like Warren Buffett said, the market can be in an unsustainable level for a while. Could be quite a while, and then the general economy comes in, and if the companies are not making new sales and is dropping people off from their payroll, employment rates high, who's going to buy things in general? It just doesn't make sense at the moment. But I mean, this is what emotional market is driven. So initially, back in February, March, is extreme fear. And now it's just extreme greed, and people think everything is nice or in the market anyway. But economy, lots of people are in America and around the world is losing their jobs. So it's kind of see the disjoint, this connection between the share market and the real economy. And real economy always wins out at the end. So personally, I just feel now it's more or less, is at a level which I think the downturn probably coming. But as far as I'm concerned, I don't know. I'm just guessing. But it's a trend follower. The big down day on Thursday with 1,800 points negative, basically have knocked a lot of trend out of whack from positive to for a short-term to ATR system, which I'm going to talk about later on in my update on my portfolio. A lot of indexes have actually gone down, so is Apple as well. And I think now it's more or less minimum, probably a sideways trade a bit, and then it might go down, but who knows? But I think that the party might be slightly over. People probably start waking up to the fact that the Feds might not be doing much, and then you got ongoing coronavirus, and then also has the George Floyd's death, and it's continuing. And that demonstration protesting is basically going around in other parts of the world, in UK as well. And then what does that mean? I think it's quite worrying. But at the moment, we just have to wait and see what the market actually do. As far as the trend following is concerned, is the market sort of have short-term wise have raised its ugly head to say, well, I'm about to turn, and it did turn on Thursday and Friday. So a lot of the indices that covered by my sample portfolio is also make a mark as well. So we just have to wait to see any further confirmation from the market. But as far as I'm concerned, in the short term anyway, the good time is done, and it's going to coming down. Basically, I think I'm going to talk a bit more about the general share market, how they changed the sample portfolio a bit more in my portfolio update. So without further ado, let's get right in. Okay, first off the bat is Apple, and this week, because of last Thursday changes of the index in America, and affect everything, and of course, and Apple's is now become a sell, short term, medium and long term still a buy. Amazon is still hanging there, so short term, medium term, and long term is a buy. Australian dollar against US dollar. Wow, that looks like topping. But it's still hanging there like Amazon. So for Australian dollar against US dollars is a buy, short term, medium term, long term. Crude oil, well, it's continued to be an uptrend like last week or so. And short term is a buy, medium term is a buy, long term is still in a neutral zone. Crude oil is similar, short term is a buy, but medium term is down to neutral now. It changed from buy last week to neutral this week. Long term is still neutral. Next, well, like I said earlier, Americans index seems to go down, so all the major indices around the world came down as well, mostly. DAX, short term now is changed to sell, medium term is still buy, long term is now changed to neutral. Dow Jones, short term is a sell now, medium and long term both also changed to neutral. FTSE 100 in UK, short term is a sell, medium term is still a buy, long term is neutral. So basically not as bad as America, but the short term is still changed to sell. Gold, even though with all the sellings going on, haven't been breaking above 1750 much, go towards 1800. So, but still, short term is a buy, medium term is neutral, long term is a buy. So it's sort of quite different. So it's a bit of deja vu coming like back in February, March area, when the market is tanking, the gold and silver just not shooting up as much as people expected. So watch out for that. Hang Seng Index in Hong Kong, short term is a buy, medium term is now changed to neutral, long term is also neutral like last week, but basically it's still hanging there and a little bit buy for short term. Nasdaq America, well, short term again, just like Dow Jones, is changed to sell, medium long term still a buy. Nikkei, short term is a sell, medium long term still a buy. Silver, that basically before I go to silver, Nikkei changed the case. So short term is a sell now. From last week is a buy to this week is a sell. Back to silver, short term, okay, again it's changed to sell. Buy last week, and medium term is neutral, long term is a buy. USD against the Chinese yuan, short term is a sell, medium term is neutral, long term is neutral. So same as last week. USD against Japanese yen, short term is now changed to sell, medium term is still neutral, long term is also changed to sell. So a bit of flight to safety, so to speak, and go to a lot of money go to Japanese yen. British pound against Japanese yen is also short term change to sell, medium term also change to neutral, and long term change to neutral. So quite a dramatic change for British pounds against Japanese yen. Next is British pound against US dollars, still hanging there. Short term is a buy, medium term is a buy, long term is still neutral. Bitcoin, nothing much changed since a couple of months, about a month ago now. Short term is still a buy, neutral for medium term, and long term still a buy. Still having problem with Bitcoin going up above the 10,000 mark, and just a side trade at the moment. iShare 20, which basically tracking the bond market, and of course like I said before, when the main stock market, the index is tanking, the bond market seems to be in a healthy state. So now short term is changed to buy for iShare 20. DLT, this ETF, and medium and long term is still neutral. So effectively, what this week is quite a lot of sudden changes because of the sudden scare and worried of the second round of pandemic. Well, like I said in a couple of episodes podcasts before, I was really worried. However sad the George Floyd case might be, the mass gathering of people, not just in U.S. but also around the world, quite major Western city, is UK here as well, and probably cause a bit more, uptake of coronavirus cases. Okay, you might say maybe just increase of test cases, test kits available for test more people. That could be one of them, but the mass gathering and lack of concerns or lack of thinking for the Western world with this mass gathering with people, irrespective either on the march for George Floyd or not, or go to the beach because due to lockdown has been eased slowly. Um, People are just not sensible and putting close quarter together, like going to the beach and not wearing any face masks and just having fun. Just fair enough for people have been locked down for a long time, but the disease, this virus, it doesn't care about borders. It doesn't care about race. It doesn't care about sex, racial orientation, whatever. It just, it's there and they find a host and affect people. And some percentage of that will get infected and then get quite seriously ill. So I said before, this is just worry about the second wave, and it seems the market suddenly got spooked, And the main thing here this week to take away from this trading update is the market can suddenly turn. Now I've been saying a couple weeks now to say the market has gone a bit too much, and even about a month or so ago I say the market will do this bear market bounce, this rebound will make everybody think everything is safe, everything is nice, sunny again, and hooray, it's times back and continue the bull market. But and then a lot of retail investors just jumped in because they worry, about missing out. And that's really the last stage when there's so much buyers out there. There's nobody else to buy, so to speak, or who is basically it's more like a the classic of musical chair. Who is the next greater fool to keep on buying off your hand. And this surge is just have no economic data backing up, and 15, no matter which way you count it, America, for example, minimum 10-12% of people is out there not working, claiming benefit. It could be 20, it could be even higher. Those are only new cases. What about those people already claiming unemployment? Those like 2-3 billions or whatever. Those people suddenly gone, gone out the statistics. So overall, I would expect people like 20% of people are unemployed in America, and in Europe it's quite bad as well. 10-15% quite easy. And with that backdrop, and the market seems to rebound so quickly, it's a bit annoying and unrealistic. But like I said before, the market just is driven by human emotion, and it can go extreme high elation, and extreme bearish, extreme sadness. And we just have to see how things go. But like I said before, the markets can turn any time on the dime. And this week, because of the scale of coronavirus, basically from America, but it's basically causing a hiccup for around the world indexes. And there's a lot of short-term sales going on here. One thing I want to talk about here, a bit extra, is basically the power of trend following. I'm not here to brag, but just this podcast is basically, to show people how trend following actually works, and, to showcase how it works. And it really is this one, for example, for Apple. Just to take example, Apple has been trading really well and more or less in line with the Dow Jones, and it's well known for people. So take that for examples. And if you have been a follower of my podcasts, you probably know, for the last couple of months now, Apple has been an uptrend just because of general uptrend coming with the Feds pumping money into the market, general worry about scares about coronavirus in America and so forth. And the market sort of did a turn in the end of March, and then the signal comes about sometime in mid-April. And then just recently, like I said, this week has turned from a buy to a sell signal. So for a space of 9 weeks, effectively we have quite a bit of upward move. A lot of it initially is because the Fed pump loads of money into the financial system and buying the ETFs and stuff, helping the bond market, and that money come back out into the general stock market. And Apple is one of the leading, um, well, more well-known technology share in America, and that also is similarity with the Dow Jones movements. So it seems to like be a good proxy. And if you have bought that during, like I said in my podcast, mid-April or something, and sell, okay, on Monday or something for about 9 weeks, 8 to 9 weeks, you basically make quite a bit of money. Now, I did a very simple calculation. Now, the way here is when I did the podcast, most likely during the weekdays when the signal comes, it's already moved. So by the time you actually got it, it's a few days delayed. But even if you take that on board, and if you take that all in initially on let's say you're going to go in middle of the April. I only just get out now, middle of June, so like about 8 weeks. And for my calculation, if you follow my trade on the podcast, you still make around, you know, roughly about 7,000 pounds. Okay, so it's if you come down to it, it's more like $73. But if you depends on, let's say you have 100 shares, and each shares make about $70. Okay, and you overall you make about seven k, and 7,000 US dollars. And let's take, a pinch of salt. Only 80%. You still roughly end up with about five and a half, 6,000 US dollars or pounds in UK. It's quite a bit of money for about 8 weeks of works, and basically the actual amount of work is minimum. It's a couple of hours here at the start, couple of hours selling, and then in the middle it's more like sitting and waiting. And this is, I mean, this example shows a lot. First of all, you always delay when you go in the market. Okay, so when, let's say, you follow my podcast and go in the market to buy Apple. Well, first of all, my 2 ATR system, which is showcased using this example, is already a lagging system. It's only like when the market shows end of day data and then do calculation, and only up to a certain point already have reached a 2 ATR line, then turn into a sell to a buy kind of thing. So that in itself is lacking. And using my podcast is another lag, because the signal most of the time is likely, almost definitely, is happen middle of the week. So by the time you hear my podcast and doing the following Monday, so in a few more days behind, so probably like a week behind or something overall. But you can still make money. And so when you're getting, it's late. When you get out, it's also late. Apple gone down, like the main general market in America, after the big hoo-ha on Wednesday and Thursday in America, you never can get out on the top either. So that's another thing about trend following. You go in late, you get out late, and you always take the middle. And of course, you have slippage and stuff like that to consider. But if you actually have the mindset to follow through, and for this 8 or 9 weeks, you have make money basically for a couple of hours work. But in between, I mean, to make this 5 or 6, or let's say 7 grand for 100 shares, that you got 100 Apple shares and sit around for 8 weeks and make 7 grand. It's quite a lot of money for most people, for especially in this climate when a lot of people lost their jobs and stuff like that. So it's quite a good tool to make money. But the problem here is, I think a lot of YouTubers don't tell you that while you're sitting, while you're waiting, it's the hardest things to do. You suddenly, in this, especially in this environment, you have a trade and make you a couple of thousand quid, and you think, I want to cash it. I don't want to lose that money. But who knows? The market here, if you continue and follow the market, it actually make you 6 or 7 grand. But if you got out early, only took 2 grand, let's say 3 grand, even 5 grand, you still left some money on the table. And that mentality, that left money on the table, thinking, worry about losing money, is real for everybody. Okay, and you can only train your mind to really follow your system if you have good confidence on your systems, that you've been training for a long time, you have gone through a lot of crap, and basically take trade out too early, and you learn from your mistake. Providing you learn from your own mistakes. Otherwise, you will just continue the same mistake, bang your head against the same wall, bloody all the time. And until one day suddenly you click and you say, why am I keep banging the head against the wall? I mean, for this is the same thing. You'll come to a point to actually trust the transformer system because you have gone through so many bad situations, leaving loads of money on the table. And what was if, scared of losing money and so forth. And once you actually, what you call the word that Operoof, you say, you basically give in, you give up, so to speak, into the system. You just let go and let the system take you where you want to go, and the system just, when it's doing its things, it just do its things, and you're basically quite surprised, pleasantly surprised how much you can make from the system, especially now, these 2 3 months when you have lockdown and make this money on the side is very very good. That's providing, of course, you have some money to trade in the first place. Yeah, so don't trade with scare money. This is quite important, and also keep your trading size down. Apple is only one trade as I'm tracking. I mean, I'm in my own trading portfolio. I'm tracking about between 40 to 50. It fluctuates, depends on the trend, so to speak. I just track the main portfolio. Let's say 40. You need to spread the money around to actually give you a total of trading, and then that because of the sum total using a slightly different method, you also reduce your risk. You also reduce your upside too, but also downside reduce much. And for me, I'm 50 now. I believe more in a steady as you go kind of approach, and that's the way it is. Especially thinking of trend following, you look at Michael Koval's books, it's about turtles and stuff. It is slowly, step by step, baby step, one step at a time, and you make money. And that is how it is. But the mental side of things, nobody talks about much. Worry about it, and a lot of it is just not foreign system. It's more like what you are inside, your own self belief, low self image, self sabotage, thinking of you're not worth it, and so forth. You just don't trade and let the trade do its things. First of all, you might trade too small because you worry about losing money. And that's one thing. It could be very much a mental game than actual calculation. Even the calculations, your portfolio say you should go in this amount, buy this amount. You think that's too much because you emotionally couldn't take it. And secondly, because low self worth when there's making money, you're just really scared of losing that money, and you sometimes get out too early, like I said earlier, and you basically have problems sitting around. Is this saying of money burning hole in your pocket, so to speak, waiting and let the system to actually do its things. And to be honest, you never know how long it takes. It could be weeks, it could be months, it could be a couple of years. When the train is actually going, you just want to sit there and sit tight. And who knows how long it takes. And that unknown is really agitating for a lot of people, me included. But I learned to take it on a stride and so forth. So this upward trend masks a lot of this good trade here masks a lot of other emotional control, emotional trading maturity, but all this is coming from you have done a lot of trades and make very bad mistake. Like what I said, I mean my work in my as a support guy for software development, software support. It's just you step on too many powder pool, and then you learn from your mistakes. Providing you learn from your mistake, and you slowly reduce it, and you slowly set up a system to learn from it, and then you have a slow, consistent result because you follow a consistent process. And that's what transferring is. You have to force yourself to consistently follow it. A lot of time, it's not the system, whatever system it is. You might be fancy to use. It's not the system that doesn't make money. It could be the condition of the market, or you need to try it, work it to trade according to your risk management. But a lot of the time, I believe totally 80% of it is mental game for trading. It's you alone. For me, for my trade, I have to take full responsibility. It's my trade. A lot of time I don't follow it when I was still learning. Even sometimes I still err, have my itchy finger try to do things. I have to calm myself down and not to break my own rules. All of this is mental side of thing, and it's very much you over time you find out trading is more than just some analysis, some chartings, or whatever method you fancy, day trading or long-term trading or swing trading. Otherwise, it's all a mental game. Can you actually take that risk when a lot of you have already traded 10 times before and start not lost? Can you pull the trigger? And when the trigger is pulled, can you actually stay the course? And a lot of it's really down to your mental game, that your own self-worth and your own aspiration, but also your need for money. That's also another thing. Try to make money, try to ends meet, and you close out your trade too much, too quickly, and not letting the magic do its own thing. So I mean, you can say, okay, Victor, you're talking about this and taking a good trade out of it. What about the downside? Yeah, the downside definitely happens, and this is why you need to risk management. And but also what I also said here is spreading the trade. So don't just trade Apple, but also trade maybe other other forex or indexes or something, or gold or silver, to give you a more spread of the amount of trade, and overall you take a sum total. That also help to reduce your risk. And the other thing here is this showcase here, I'm only expecting you have bought 100 shares of Apple in here, but let's say you got a bit more money. As the price increases, you buy another 100 or 50, buy another 50 at certain 80-hour point, or 100 pounds advance or something. I don't know, it's up to you. But you use a consistent method, and you basically can make so much more. And this here, all I'm talking about here, it's not even this $7 grand here. It's not even talking using pyramid system, just general trade, just taking one trade at the start and finish at the end. But if you take multiple entry points as the price is moving in your favor, just like what the Total Trader book say, the Total System 2 rules are, and you can make possibly and definitely, I think, double. And my own account definitely double more than that. And so it's up to yourself to actually follow the rules. And but obviously, the risk is that the market suddenly turn. So you only period when the market is in your favor, moving in your favor, like what we have done in Apple for the last 2 months or so. That kind of thing. And just like I said before, like taking a bath, you don't jump into a bath pool of hot water that your hand think is just right. Your butt might not think is the right temperature. The soft tissue between your inner thigh might not think is very it might be too hot for it, because your hands use it a lot, so it's less sensitive than your inner thigh or so for your butt. So this is thing same as trading. You might think everything sort of works and you're going big. You don't. You're just going slowly, bit by bit. It's like you go in the bath, your hands, your limbs, and then before you actually put your butt down and lie down, the whole body, slowly, one at a time. So when you pyramid up, you also do one at a time. Taking on a bit more trade, a bit more when the market actually tells you so. Just like the water in the bath, water feels right, you lie a bit more. Don't feel right, add a bit more cold water, get out. So it's a process that you need to learn. But if you use the power of the pyramiding method on top of trend following or any other method, you really can make quite a lot of money. The devil in the detail is how and when to actually use it. And I think if you look at Mel Covell's Total Trader book, it actually shows you exactly, I think chapter 5 or something. Go read that, read the whole formula, and just repeat in your trading, and you definitely make some money. And but always remember the downside. And if you have no money, you can't trade. And if the markets move without you, it's only daydream that you make money. So you need to have money on the side, so you not risk too much. And sometimes just basically just give in to your system. Let it be surrendered. That's the word opera is used. Surrender to the process. Surrender to your trend following system. You spend whatever method you are, spend tons of time putting it together. Trust it. And after you experience it and trusting it, just let it be. Don't try to change it. Manage your own emotion. Manage your own risk. I think manage more your human emotional risk than actually monetary money-wise risk. And let the system do its things. And you'll be pleasantly surprised. So this is the end of the podcast, and I will speak to you next week. Bye for now.